Hey, good morning, everybody. Good evening, good afternoon, whatever time zone you're in. If you're new to the channel, welcome. If you're coming back, thank you so much. So we're going to continue our little series on what to do if you have an extra grand laying around. Some ideas, and some of them are fun, and some of them are not. Some of them are serious. So this is just one of my little money videos that I put out at least one a week I put out. And I'm going to go off the screen. You can go back and watch some of the previous ones if you missed the last ones. I'm trying to put them in order by part 1, 2, whatever. Follow the number in the series. I'm going to keep this video around 10 minutes and then I'm going to shut it off and we'll do a part 3. So this one here is, if you had an extra grand, you'd make your lawn more drought resistant. And this could be, if you were running a sprinkler all day to keep your lawn green, as part of the U.S. deal with severe drought, it's no longer practical. Now, I don't know about other countries, but here in the U.S., some places have some serious drought issues, so you need to consider getting a landscape design if you had an extra grand, or take some steps that you can do for less than a grand to make your lawn more drought resistant. Ways to take the rain, well, if you're living in a drought, you don't have any rain, so lowering your water bill can help increase your home's value as well. So I'll go talk to a landscaper and see if you can get some ideas on how to do that. Alright, some other things you could do if you had a grand. Instead of tearing out all the grass at once, removing grass around your house and replacing it with shrubs that require less water. Alternatively, carve out an island in your lawn and plant a small garden of drought-resistant plants. Alright, native plants have adapted to your environment, which means they require less water to thrive if you're living in a drought area. A master gardener who are volunteers that train to grow your plants that are native in your area. And a good source of and can be a good source of information. And you can find information about a local master gardener through your county in the U.S. and an office. So just type in master gardener in your area and see what comes up. All right, another thing you could do is add succulents. Succulent plants add drama to your garden and they require very little water. 90% of the time, you can break off a leaf, put it in the ground, and it'll grow. And this makes it possible for your neighbors and other people to share these succulents, which keep the cost down. So speaking on our little pattern here of landscapers, if you need a landscaper, hire somebody that's studying this, maybe like a student landscaper, so they can get experience. They can give you a master plan, a drought-resistant plan for a fraction of the cost that you would pay for a landscaper that has major business. All right, now getting off of this subject, drought and plants and all that, we're going back to saving. So another thing you could do is give the gift of a savings bond. Let's say you have $1,000 laying around, right? A savings bond in the U.S. is the gift that keeps giving, especially these days. The inflation-adjusted Series 1 bond issued from May through October of 2022 has a rate of 9.62%. The Series 1 bond issued in November of 2022 through April, which is when this video will be coming out, April of 2023 pays around 6%. So in the past, grandparents and others could buy a paper savings bond from a local bank and enclose it in a holiday or birthday card. Now, unless you receive a tax refund, you must buy the bonds electronically through treasurydirect.gov. You'll need a Treasury Direct account. Your recipient must have an account too. Whether you buy I-bonds as a gift for yourself, the maximum amount is $10,000 per person. If your recipient is younger than 18, the parent or custodian who's watching them will need to create a custodial account on behalf of the child. After the child turns 18, they can create their own Treasury Direct account. So the custodian can transfer the savings bond to that account. This is kind of a new thing because I've done bonds for my family members before, and the other people did not even know I was buying them. They didn't have to have their own account as well. All you needed to do was have that person's social security number. So for my cousins or whatever, I would have to ask my sister what her children, what their social security numbers are, so I can get accounts put in their name. So it's a little different now, unless you can still try and do it that way. I don't know if you can do it that way or not. But it sounds like everybody has to have an account, which they may not, that might make it more challenging to get a savings bond. One of the accounts that have been established, you'll need the recipient's full name, social security, their account, Treasury Direct account number. Okay, so this is a new thing where they have to have a Treasury Direct account number. It's more involved, which makes it more difficult for people to even want to buy bonds, by the way. If they have to go through all this to get a bond, then more than likely they're not going to do it. So I don't know why they're requiring all this, but people are busy, They don't want to do all that stuff. Even watching this video to the end, I'm lucky if I can get anybody to do that. If I do, when I start making buku money on this channel, then I will start giving out Amazon gift cards to people that stay to the end. But so far, I'm not making a lot of money, and I don't have any sponsors as of yet, so we won't be doing that on this video. But anyway, going back to the bond thing, Treasury doesn't offer gift certificates, so its website features several cards you can print out and give to the recipients, which I don't know what the cards are, but you can go check that out at treasurydirect.gov. And if you prefer giving a paper I-bond, that's an option, as long as you receive a tax refund. So when you file your tax return, use Form 888 to direct the IRS to use all or part of your refund to buy a paper I-bond. Maximum I-bond you can purchase this way is $5,000, and use the form to direct Treasury to issue the bond in the name of your recipient that will receive the paper bond at the address the IRS has on file for you. So that sounds like an easier way of doing it, but not all of us get refunds. All right, so the last thing on this video is to help a local business. And if you have an extra grand. And this impact investing platform called Kiva.org, which is not sponsoring this video, by the way, takes a novel approach to charity. It asks for loans that may be repaid and relent multiple times instead of donations that never get repaid. So, Kiva investors crowdfund loans to entrepreneurs who often lack access to banking services. Kiva was originally designed to benefit people in low-income countries and now includes U.S. borrowers. And this means that you might lend to a deserving entrepreneur in your own community. Kiva investors may lend between $25 and $500 per project, and Kiva encourages an optional donation to cover their administration costs. The loan is not tax deductible, but any amount donated to Kiva is. So you can donate to this organization here, and you can write it off on your taxes. So loans are interest-free in the U.S., and the rates are as low as possibly abroad. So the repayment rate on all these loans is 96.4%. So investors may cash out their accounts at any time. And with $1,000, that's what we're talking about in this video, you can make many loans or just a couple. You search on this website for a project to support, and some of the things are seeds for a farmer in Mali, which in itself is eye-opening, and with such high repayment rates, you could be relending most of that original investment for years to come. All right, everybody, that concludes this video. I thank everybody for watching and staying until the end. And part 3, we will continue in part 3 because I still have more to talk about.